Folks, so we just saw our inflation reading, aka CPI. We saw that it is now 3.0 headline. We still have rent inflation being reported at 5.4%. That is a horrible calculation. It is 12 months rolling average. It's just nasty number to look at. The actual results are far lower at 0.4%, according to apartments.com, I believe. But I actually want to have a conversation with all the mom and pop landlords about when should you lower rents. Let's assume you have a vacancy. Let's assume you don't have the quality tenants you're looking for or whatnot. All right, Dana, when should a landlord think about lowering asking rents or maybe tweak the deposit a little bit? What do you think?
Great question. And I have some really, really strong opinions on this for everyone out there. And the reason I have strong opinions is you don't understand how important it is to adjust prices very early on when you list the property. And the reason that I bring that up is your listing continues to fall. When you first list your property, every single listing website, whether it's Zillow or apartments.com or realtor.com or Zumper, they're going to say this is a hot new listing. And they're going to send it out in all their emails. Look at these hot new listings that meet your criteria. The second it gets on to their 10, 20 days, you guarantee you're not part of those emails anymore. You're no longer hot. And so you definitely want to price it correctly at the beginning. Whatever your current tenants paid that are just moving out, so the existing tenants that are moving out, is not a reflection of what the market rates are. It is so silly. Some landlords are like, great, I'll go ahead and take what tenants paid last year and take, inflation rates and just add that, and that's the new rental rate. That is a terrible way to price your property. And the reason for that is that's not how a tenant prices your property. They're not going to say, oh, the tenants last year were paying $1,200 and so $1,300 sounds reasonable to me. No, they're going to go on to Zillow.com, Trulia.com, apartments.com, and they're going to type in their criteria. I need a 3-bedroom, 2-bath in this neighborhood or, at this price. And they're going to see what's on market and they're going to select the property that is the best one for them, but also at like the most reasonable price, right? And so whatever you had tenants pay does not indicate what it should be listed at. So you need to act like a tenant. Your first step is just to go in there and say, okay, I'm a tenant looking. Let me type in what my property is, how many bedrooms it is, how many bathrooms it is. Great. Most listings you'll see on Zillow. So I always tell people start with Zillow or start with our rent estimate because we pull all of those to say, here's what the market looks like. But you can go onto Zillow, you can go on to, apartments.com, any of them. And you basically go through and type in your exact criteria. And then you say, what else is out there on market? How much are they going for? Find the most comparable properties. Then this is the important thing. Don't just take what their price is. Scroll a little bit farther down and see days on market.
Yep.
If the days on market is 20 days, 30 days, and you see what's actually great about Zillow's now is they tell you how many applicants it got and how many contacts.
Wow.
You can actually look at that and be like, oh, that's interesting. It's been on market for 30 days at that price. There's other ones that are lower and they have way more applicants. And this one has 0 applicants. It's been on the market for 30 days. You're not going to price it at that comparable rate because you already know you don't want to end up in that situation where it's 30 days with 0 applicants. And so you really want to look at both what's on the market that tenants are looking for, but how have tenants over the past 10 days, 20 days reacted to this property? Because don't forget, all the ones that were rented and leased really quickly are no longer showing up in that feed.
Exactly. Yeah.
And
they're not there anymore. They're gone.
Exactly. But if you see a comparable property to yours and it's been on market for 2-3 days and it's at a price and it has, 20 applicants, you're going to say, oh, I could increase my price a little bit from what they have. So the market is going to tell you exactly how much you can list it for. And then the biggest thing is once you list your property, you want to know how the market reacts. It's always easier to drop the price than increase the price. We had one in Tucson actually last week where we were like, shoot, we should have priced it a little bit higher. We had a ton of traction on it. And the one difference it had was it had a pool and the other ones didn't. So we kind of price the pool at, $200 a month more. They have to pay for pool service. So there was a little bit of that we were stuff in our head that we were thinking with it. And it turned out we got so many applicants that it's almost like, shoot, we maybe should have priced it slightly higher, seen what traction was, because you can always lower the price. And I wouldn't wait 10 days to lower the price. Because remember, you're getting the most promotion in the first 5 days. So within the first 5 days, if you're saying, "Ooh, gosh, I've only got 2 or 3 applicants. I've called, texted, emailed all of them, and I haven't heard back," that means you're priced way too high. You could also look at other things like, are you accepting pets and other things in there to say, like, hey, 50% of tenants have pets. So if you're not, that could be a concern as well. But you just really want to make sure that those first days are really important for you. So yeah.
When I look at mom and pop investors, if you've been a mom and pop investor the last 3 or 4 years, it's been relatively easy to fill units.
Yeah.
I've been doing this 20 plus years. It was frankly the easiest to fill units the last 3 years. You had the most applications. You had the most quality applications. I can tell you right now, just looking at the past 30 days in my business, applications are down, which means more
Yeah.
people are staying put, right? There's less movement. Um, it's not quite, 2005 bad. 2005 was the worst year to be a landlord from a rent perspective. More on that later. But I would tell a mom and pop investor not to be shy. If you put out a listing and you don't have quality tenants applying in a week, I would tell you to lower the price or change the deposit. You can do one of those two things. Do you go half off a deposit or lower the rent? Your choice. You can dial both things. But yeah, I suspect if we do get into a slower economy or heaven forbid an actual recession, I don't think a lot of mom and pop landlords realize that weeks of vacancy really add up. The last thing I'll say on that is I would rather have a vacancy than an iffy or bad tenant. I'm not telling you to take just anybody with a pulse. It's not what I'm saying. I'll say it this way. I would lower rent on a house $100, $150, $200 to get better quality tenants. I'm not sticking in a bad tenant just because they, say they can pay $200 more. No, thank you.
Yeah. And the security deposit's an interesting one. That's when I find you can negotiate after the showings. So if you're looking at your pipeline and you're saying, great, I've got some tenants interested, these are the most qualified through the process, and they're saying, hey, I'm choosing between you and another property or something like that. That's where you can go in and be like, okay, great. What's their security deposit? We could do 75%. And this would be like, you've done reference checks on their past landlords, that they're going to keep the property in good condition. But there's some negotiation you can do after on some of those additional, the additional monetary, like financial things that are put in the lease. Same with pet rent, pet deposits. You can kind of negotiate on that. Also, another important thing, just because we're talking about, you mentioned, Michael, security deposits. Reminder to all the California landlords out there, July 1st, you can't charge more than 1 month's rent unless it's furnished. There's a whole, just go to the government website and look at that just to make sure that you're aligned, because it used to be 2 months of rent for security deposits. So just make sure that you're up to date on the laws there.
Yeah. So let's pivot. That was really a discussion about, hey, I have a vacancy. It's not being filled. When do you chase? When you price right? All of that was awesome. But, let's assume you have tenants in your property. I think, again, the last couple of years, it's been relatively easy to raise rents. Inflation was out there. Again, according to apartments.com, that is really subsiding now. I think 0.4 increase was the last I saw. Many areas are negative. So why don't you talk about, when should you raise rents on an existing tenant? Should you raise rents in this economy? Let's talk about that for a minute.
Yeah, great. So first of all, you should always do rent increases every year, unless obviously when you go back on the market, because that's what a tenant is doing. Should I renew here or should I move? And there's slightly a burden for moving, because moving, especially if you're in a single family home, it's a lot of work. You have a lot of
Yeah,
stuff. And
a lot of stuff.
so there's a little bit of a price premium of just like staying put rather than having to pay for moving companies and cleaning and all of that. But the tenant is going to go online. You know, when you give a price increase, they're going to go online and say, is my landlord being fair? That's what they're objectively going to ask. And so you already want to make sure that you're priced just slightly below what that market rate is, because keeping the same tenant, assuming that they've paid on time and everything, is going to be far better than a month of vacancy and turnover costs. That's going to cost you more than the slight reduction in rent from market rate. So just kind of keep that in mind. With that said, when you go through the process, every tenant, at least that I've spoken with, almost feels like, oh, a rent increase. Why would they do that? I've been such a great tenant. And that's what they're thinking. There's always two sides to a story. A tenant's like, but I helped, fix the doorknob when it was loose. And I did this. Why? And I haven't put in that many repair requests. Like, why are they increasing the rent? And so it's really important to kind of set some expectations there. One, there's obviously Dion's binder strategy that I know, Michael, you've had him on this show to talk about. So one, you want to have those comparable properties. You want to show what else is on the market. But two, I always like to give optionality and show them, hey, it's actually a really fair rent increase. And so how I do that is I basically say, great, you have two options. You could do a month to month. And now some landlords are opposed to month. So I totally understand that there's pros and cons. You could do a month to month or a 12-month lease. But if you opt for a month to month, it is going to be at a significantly higher price. And that significantly higher price is going to be, above the market rate. Make sure you check how much you can increase your rent, because you don't want to increase it above what your states and counties' laws state. But if you say, great, a month to month, you could be on a month to month lease, but it's going to go up 8% or 9%. Or if you wanted to sign another 12-month, we'd be happy to give that to you at a 3% increase. Suddenly 3% doesn't seem like that much, because you look at the difference and you're like, oh, the landlord is being fair. The alternative is not as good. And so that's another way to think about it, is to also think about a month to month optionality, especially if you say, hey, these tenants are going to stay wherever they are long term, but they themselves are probably thinking that if I give them a rent increase, it's going to be a lot. This would kind of anchor them on an 8 or 9% increase and make that, 3% or 2% increase look amazing. So that's another opportunity and option for you.
Yeah, I love it. One of the things I love about these conversations is Hemlane, the platform, really helps mom and pop landlords understand what is possible, helps with the advertising. You also have a free version available now. So where can people go find the trial? What's on the free version? Where should we send them? Hey, Dana, you back? Looks like we lost you for a
I'm
second.
back. Oh, no,
So,
I'm back. I'm sorry about that.
That's okay. I just wanted to wrap up with, I know that Hemlane offers a free version now. You obviously still have the 14-day trial. If there's a mom and pop investor out there that wants to know how Hemlane can help them, where do we send them?
Great. Yeah, you can go to Hemlane. Just type that into Google. Like Michael said, there is a free option for you to advertise to as many listing websites, do background and credit checks, and also your accounting. So that is all free. And then we have paid options. Do mention one rental at a time. One, because of this video, we want to make sure to show you that exact functionality and how you do it in the system. And then second, you do get 20% off that first year, which you can't get that discount anywhere else. So please mention one rental at a time.
Dana, you're amazing. Love what Hemlane's doing. You're constantly evolving, adding things, releasing free versions, giving the market, mom and pop investors what they want. Mom and pop investors, this is a tool you should check out, hemlane.com. Dana, thank you so much.
Thanks for having me.